Good day everyone, and welcome to Charles Analytics. I'm pretty sure that a lot of you guys are aware that I started trading my 50k FundedNext account last week. I traded gold throughout the week from Monday through Friday, even though on Monday through Thursday the market was ranging on the daily time frame. From my experience, this is where a lot of traders lose all their money. So they make money during a trending phase and give it all back when the market is consolidating. Not all ranging markets are tradable. If you do not see a defined range within the range to take advantage of, I'll suggest you just sit on your hands and wait for the market to clear above the upper limits of the range or the lower limit of the range before you execute your trade. Now, I'll be taking you to my FundedNext account where I'll show you the analytics of each trade and where my account is currently sitting. Next, we'll go to Trading View where I'll show you the trades I took and the thought process behind all these trades. And also, one thing I want to achieve in this video is that I want a situation where you get to learn as you follow me on this journey. So I'll be dropping educational tips as we go along. Let's go. So this is my FundedNext account. This is the account that I'm currently trading. Let me click on the dashboard to show you more details. Now this is my current account. Now this is the 50k account that I'm trading. Equity is currently at 51,700. Let me click on the account so that you see more details regarding to it. Okay, here you see that I'm currently up by 3.4%. This is actually Monday. I'm doing this video on the Monday. I'm currently on a trade right now. So that's why you could see floating loss. I couldn't do this video on Saturday or on Sunday. I was supposed to do it on Saturday or Sunday, but my week was very stressful. So I'm currently doing it on a Monday. And a little confession, I finished a 1 hour video like 2 hours back. So this is what I will do. I don't want to make this video lengthy. I didn't even know it was up to 1 hour. What I did was that I went to each of my trades and I was breaking it down. You know, I spent a lot of time doing that. So I want to try and hasten. I want this video to be at most 15 minutes. I don't want it to take time. So I'll just show you the exact things I want to show you. Then I'll just move on. Touch the most important things, then move on. Okay. If I want to do an educational video, then I can make that one lengthy, right? But I don't want this one to be lengthy so that everybody can follow, right? Floating, okay. I'm currently up by 3.4% on this one. Let me go to trading overview so that you see, get more stats based on the account. Okay, so equity 51 plus balance is 51. We're working with balance because that was where my account was before I took the present trade that I'm in, right? So balance 51.7, average trade 1,000, average loss $303 dollars, average risk to reward 1.3, win rate. This was initially 40 something plus, but because of the running trade now it's dropped down a bit. Loss rate 50. Profit factor, what profit factor is that it's gross profit over gross loss. If your profit factor is above one, it means you're profitable. If it is equal to 1, you have to break even. But if it's less than 1, it means you're losing more than you're making. Now, so for my account, what this means is that for every $1 I lose, I've been able to make $2.3 back. That's what this means, right? Let's go to my account. Initially I was at 8 trades, but now it's initially I was at 7 rather. Now it's 8 because, like I said, I'm in a trade right now that is running. Okay, so these are the 7 trades that I took last week. I want you to just look at one section before I move. Look at the section 1,000. See my profits 1,000, but when I lose 300, 500. When I win 1,000. When I lose I lose 414. This was a break even. This minus 40 was a break even trade. I see this other one. When I win, I win. So the idea is that when you win, you're supposed to win higher than what you're losing. You know, if you're losing more than you're winning, then in the long run you will not be profitable, right? So this is as of now the account is profitable, right? Let me go to analytics so that you see my equity curve. Good. If we see my equity curve, you see that the equity curve is bullish, right? I started at 50,000. As you can see, it's above 51,000 currently, right? And you can see I've traded just gold, 100% gold on this account, right? So let's go straight to my chart while I show you all the trades that I took, right? Sorry about that. The first trade I took was this one right here. This one, I'm currently in 1 hour time frame. Let me move to 15 minutes so that to be clear. Yeah, see the trades. But this trade was actually executed on 30 minutes, right? I have 3 entry time frame. I have 15, I have 30 minutes, and 1 hour. If 15 minutes doesn't give me what I want, I wait for 30 minutes. If 30 minutes still doesn't give me what I want, I wait for 1 hour, right? So for this one, I waited for 30 minutes. Okay, good. So it's a simple break and retest trade. This zone here is a 15 minutes, is a 4 hours support, 4 hour support, right? So price broke above it. Simple. I like to keep it simple. I don't like to complicate things. Broke above it, retested. A support was formed above this level, as you can see, right? Then I entered immediately after this candle, this one right here. My target was 1:2, and for this trade, price got to my 1:2. Let me explain something before I move on, right? There's a reason why I set my take profit at that level. There's a reason why. It's because if you go to 4 hours time frame, you'll notice something. You see this level. You see this level, right? It's a very strong psychological level, right? So that is why I decided to exit there. The mistake a lot of people make is that they see a strong level on a higher time frame, and instead of exiting there, they tend to put their TP way above it like this. You know, when you do such a thing, the probability that it will go there will be very slim. And what you notice is that a lot of your trades will get to these areas somewhere here like this and just suddenly collapse. Because of course, if you look at the price action there, you see that there's a rejection from this level down to this point, right? So it's not just for you to know how to enter the market, you also need to know how to exit and where to exit, right? So that was the first trade I took. And let's go to the second trade. The second trade was this candle here. Let me see if I can hide this. Can I hide this? The second trade was this one right here. This one. I entered at the close of this candle. At the close of this candle, my stop loss was just a bit above this week, but this level here held. You can see this level here. The price went back and took me out, and I was still sell bias because of what was printing on the higher time frame. Let me show you guys. So now my thought process was this, overall the market is bearish. Overall the market is bearish. You see that the market is forming low, high, right? Now, we previously saw this strong impulsive move, and now we are also seeing this resistance form there. So two things can happen in the future, right? Either we're going to see something like this, price will come back to the top of this range, break it, and come back here, and maybe even continue higher, or we could see a lower high around there, and price could trend and ultimately break this place and continue lower, right? Now, when I was trading last week, market was in this range, this one here. Market was stalling, right? So I had to be taking advantage of those micro range within the range, right? Trading a ranging market is very stressful because the sentiment tends to change very fast. 1 minute is buying, the next is selling. So if you do not manage your trade appropriately, a winning trade is going to potentially turn into a losing trade, right? So that was the second trade I took. This is let's go to the third trade I took. Like I said, I don't want to waste time on this video. I will do an educational video where maybe I get to do a full breakdown on maybe top-down analysis and all that. But for this, I don't want to make it lengthy so that more people can follow, right? Now, this is the third trade I took, this one here. It was also a losing trade. What happened was that at the time, price was here, drew this. I also drew this. I don't know if you're seeing what I'm drawing. Let me change the color so I feel brighter. Let me change to yellow. Beautiful. Good. I drew that flag and I also drew this level. Let me also change that one to yellow so that you guys can see good. And I said once price breaks below that support that I'm going to sell. So immediately it broke below it, I executed my trade, but you see what followed. This horizontal level held. You see, it tapped into that level and broke above this level here and gave us this bullish momentum candle. Now, I was already anticipating that the day I was trading that, because something a lot of traders don't know how to do that affects how they manage their trade is that they only know how to analyze based on a particular bias. One thing that has helped me is that I do not only analyze with respect to what the market is telling me, I also analyze against it. So if I'm seeing a reason why prices may potentially sell, I will also do a counter analysis, and I'll ask myself some certain questions, like if this trade is to play out, what are the things I need to see? For example, if this trade is to play out, I ultimately, aside the fact that it broke below the trend line, I'll ultimately need to see price take out this low, right? This yellow line will need to give way for price to continue moving downwards. Now the question is, what do I need to see that I know may likely invalidate what this move? Of course, this level will hold and price will push backward. That's exactly what happened. Now, if you don't analyze against yourself, when the market's condition change or sentiment change, you won't see it. You'll just be there hoping that the price will continue to move in your favor. So when I saw that, I knew that the probability that this trade will play out is very slim. So I decided to just cut my losses instead of receiving a 1% loss, right? I was still patient, watching out for opportunity, and later on I saw this opportunity right here with this candlestick, this one. The resistance level was formed. Then price gave me a good momentum candle there at the back of what this sell-off, showing that there's a high tendency for price to continue lower to the next 4H level. So I immediately executed and put my stop loss around a 4-hour support. As you can see, price rallied from there to my take profit. So now if you're counting, I've had 2 wins and 2 losses, right? Then later on we saw this swing from that 4H support here, and I saw this correction downward, the sell-off. Price sold to a 4H level and gave this bearish engulfing candle, and with that I executed this trade. This trade was executed. Stop loss above this level, and I was aiming this base here. Also, now listen, because of this impulsive move here, because of this impulsive bullish move here, I was also anticipating, I was also watching out for this level here. Now I had a simple plan. I know that for my sell to work, for price to go to this 4H support, this level will need to be cleared. Simple thought process, this level will need to be cleared. So my job is to watch out for the price action at that level to see what will happen. So when I saw this tweezer bottom here, I was no longer comfortable with the trade because I've anticipated, because there's a possibility that we can have this. It could be a swing high, low, high, double bottom. Price may come here, maybe range, short term, then maybe break this place. So when I saw this, I was not comfortable because I knew that there was a high tendency for price to come all the way up. I don't know how far, right? But I wasn't comfortable, so I managed my trade. You know the minus 40 that you saw? Yeah, this was the particular trade that gave me that. So I was at break even, but price was still past my entry, so that's why instead of $0 there, I still came out with minus 40, right? So this one was a break-even trade. So now we have 2 wins, 2 losses, 1 break-even. So if you look at daily right now, you that last week you noticed something, that the daily was ranging, right? See the daily, let me show you. The daily was ranging. It was a terrible range. This was Thursday last 2 weeks, Friday, then Monday, Tuesday, Wednesday, Thursday, right? So I just told myself that, see, I'm going to wait for this what's it called, this range to break, because see how it works. You see this high here, that's the upper limit of the range. Then you see this low, this lower limit of the range. Now this one here is called, the lower limit is called support, while the upper limit is called resistance. Now what is a support? A support is an area or a level where buyers position to potentially drive price higher. A resistance is a level, a psychological level on the chart where sellers position to potentially drive price lower. So the idea is this: for price to go higher, this level, price needs to break this level, take out this level to increase the probability of going higher. For price to go lower, a candlestick needs to break the lower limit of this range, right? So the idea is this: you see how the movement has been within the range, right? The direction within the range wasn't clear. You know, 1 minute price is going up, the next the price is going down. So what has been happening is that buyers have been waiting, you know, for signs, you know, for a break and a close above this resistance to jump into the trade. And sellers have also been waiting for a break and a close below the support to jump into the trade. So I just told myself that, see, instead of trading within this range, let me just wait for price to break out of it so I can see a clear trade. And that's exactly what I did. Now on let me go to 15. On Friday, we finally got a breakout here. And I jumped in, put my stop loss above the wick on the 15 minutes, targeted 2%, and that was it for me. So that was how I ended the week. 7 trades, 3 wins, 2 losses, and 1 break even. That's about it. Very, very simple and straightforward, right? So what I'll do, I'll try my best to see if I can drop an educational video this week. I'll try my best. I am usually very busy in the week, but I'll try and do a video on inter-time frame structural analysis, also known as top-down analysis, to show you how you can link different time frames, from the monthly, so what you need to watch out for on monthly, what you need to watch out for on weekly, daily, your 4 hours, down to 15 minutes time frame, right? So this was the trade I took. This was the thought process behind how I was able to manage my trade and still end the week at 3.4%, right? So on hopefully on Saturday, on Sunday, after I'm done trading this week, I will update you guys to see if I was able to take the account higher, or if the account is back at 50k or even lower than 50k, right? So I'll keep you guys posted. Thank you for staying with me till this time. The reason why I'm rushing is that I don't want this video to take time. I don't want it to take time. The previous one I recorded was 1 hour. It's too lengthy, so I just decided to go through it. I took a lot of time to really explain what I did technically, but the video, I don't want it to be that long. An hour is too long. It's too long, right? So I promise to drop an educational video. Thank you very much. So that's that for how last week's trading went. Thank you very much for staying with me till this time. And for those that have not subscribed, please do subscribe, like, share, comment on the video. And also, if you want me to do educational videos, let me know, because initially I wanted to merge my weekly videos with educational video, but I realized that it would be too long. So just let me know in the comment section, do you think a merger will still work, or you want me to do separate videos, where I'll do in-depth analysis into how I look at the market, how I trade and all that. Once again, thank you for your support, and see you next week.